Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Wednesday, 8th October. Coming up on the show, gold surges past the $4,000 an ounce level for the first time ever. Nvidia reportedly backs Elon Musk's artificial intelligence startup, xAI. And which footballer has become a billionaire? So grab your coffee and let's own the morning. Well, the first thing you need to know is that gold has surged past the $4,000 an ounce mark for the first time ever. Concerns over the strength of the US economy and the ongoing government shutdown added fresh impetus to a scorching rally. Gold has jumped over 50% this year. In fact, just 2 years ago, it traded at half these levels. Uncertainties over global trade, the independence of the Federal Reserve, and US fiscal stability have all been factors that have seen the price of the safe haven asset soar. Bullion is on pace for its best annual performance since the 1970s, a decade when rapid inflation and the end of the gold standard sparked a 15-fold rally of the precious metal. The next thing you need to know about is that President Trump is ramping up the pressure on his opponents as the shutdown rumbles on. Take a listen to this.
But we have a lot of things that we're going to eliminate and permanently eliminate. You know, one of the things that we have is some advantage, you could say, but because of the shutdown, which I think they made a big mistake, we're able to take out billions and billions of dollars of waste, fraud, and abuse, and they've handed it, on a silver platter.
But at the same time as these threats from the president, the Democrats are showing no signs of budging in their opposition to a stopgap funding measure that doesn't address their healthcare demands. And the final thing you need to know about is Elon Musk's artificial intelligence startup, xAI. Well, it's reportedly raised another $20 billion, and one of its backers is Nvidia. That's according to Bloomberg. Of the $20 billion, Nvidia is investing $2 billion. Musk has already tapped his companies for investment in xAI, including SpaceX, and later this year, Tesla investors will vote on whether the EV car maker should invest too. Nvidia declined to comment on the report for Yahoo Finance. Well, the focus for markets around the world, the AI trade. The Bank of England issuing a warning that valuations are, quote, stretched and spur the risk of a market correction. SoftBank making a play in physical AI today. It's acquiring ABB's robotics division for $5.4 billion. This is the latest in a series of investments from SoftBank as it looks to position itself in the AI boom. Other recent investments include OpenAI and the acquisition of an AI chip designer. And earlier this year, Masayoshi Son was at the White House with Sam Altman to announce the data center joint venture Stargate. The deal means that ABB is dropping its earlier effort to spin off the robotics division into its own separate publicly traded company. But there may be some warning signs starting to show, and the latest is at Oracle. It's been a recent darling of the market after the company said last month revenue in its cloud computing business would soar 700% in the next 3 fiscal years. But a new report says the profit margins on its cloud computing business is much lower than Wall Street expects. The information first reported Tuesday that in the 3 months ending in August, the company had a $125 million gross profit, despite generating $900 million in revenue renting servers powered by Nvidia chips. Ahead of the opening bell this morning, Oracle shares are edging lower. And Josh Lipton, well, he took a closer look at the health of the AI trade on market domination. Take a listen.
I think it's a lot of hot air in that balloon. I do think that there are little bubbles within the overall AI trade. Companies that have zero revenue, that are getting $10 and $20 billion valuations. You see it with some of the quantum names. You see it with some of the energy names that are just running really fast. But you look at the operating leverage and the strength of the largest, the Mag 7s, the Broadcoms, TSMCs, ASML. These are sturdy companies with incredible balance sheets that are making very intelligent bets on what the next 5 to 10 years are going to look like. And by the way, one thing on 1999, when in 99, the earnings were not even close to keeping up in terms of the companies and the prices of these stocks. It's not the same case. If you actually look at the line of how the earnings are matching with the revenue growth and the price appreciation, it is right in line. So I think a lot of people want it to be a bubble. I call it this is just the most hated rally of all time. But I actually think there is a really bright future, and that AI is really only in its beginnings, Josh.
So Patrick, I'm going to ask you the same question, but maybe I'll just frame it a little differently. How confident are you that on the other side of what's literally going to be trillions spent here, that investors are going to see on the other side of that, they're going to see, okay, we're going to see material, meaningful revenue generation?
Yeah, so I was working at a .com during the .com boom and the .com crash. But I do want to buttress it on one end and just say I'm confident for the next, let's say, 2 years, as long as the hyperscalers can be funding their CapEx with cash before they have to be diving into debt or doing some equity financing. I feel really good about that. But to answer the question, I feel a lot more confident than I did during .com. There were so many different bad business models that were out there. Literally, if you have access to a browser, you can get the benefit of AI. We have connectors now, we have APIs, we have ecosystems that quite frankly didn't exist. Am I going to Babe Ruth this? Absolutely not. We should be asking these questions, and what we should be looking at are milestones of that downstream value.
What are the kinds of milestones you're watching, Patrick?
Well, the first thing you're going to see is you're going to see a cool down in spending on CapEx with the hyperscalers, or you're going to see some I would say hard questions that investors are asking them. I think we have to start to see agentic frameworks that can be developed horizontally through the Microsofts, through the Googles, the AWSs, in conjunction with, I'll call it enterprise SaaS, where they are actually delivering higher levels of revenue and utility. On the consumer side, what I really want to see and what we should be concerned with is if we're not seeing increased revenue or new services based upon this. I feel pretty good, I feel better longer term than I do midterm, because I think if we get to AGI, paying that $200 per month per a lot of people on the planet will deliver incredible value.
Coming up on Morning Brief Market Sunrise, the government shutdown is in its second week. And while markets have mostly ignored it, some industries could face headwinds as a result. Stay tuned. Welcome back. So far, the stock market has taken the government shutdown in its stride. But if you look below the surface, certain sectors could be harder hit by a prolonged shutdown. Jared Blickery is taking a closer look in this edition of Stocks in Translation.
Uncle Sam is closed for business, but life goes on. On today's Stocks in Translation, we are breaking down the playbook for planes, parks, pantries, and portfolios, telling you the pain points and down the road where the dominoes might tip first. For planes right now, and let's bring up this chart here. For the planes right now, most airports are open and most flights are a go. But with TSA and federal staff unpaid, those peak hour lines, they can stretch. And national parks are still mostly open, but services are pretty thin. And when it comes to pantries, SNAP food aid should be on time in October, but WIC, which is aid for mothers and children, could tighten soon, depending on the state. And for your portfolio, yes, the Dow, S&P, and NASDAQ, they're at or near record highs, but the industry's watchdog, the SEC, is not reviewing deals, so the IPO pipeline, it's starting to stall. Now let's take a look at some of the heat maps of these effective industries, starting with planes. And I have these here. And this is going to cover the month of October, basically going back to the close of September. So right now we have airports open and pilots and flight attendants are getting paid. And you can see it's a mixed bag for the airline stock returns, but American is leading. And remember that traffic controllers and TSA are on duty but unpaid. This week should mostly hum, but the real risk arrives after that first paycheck is missed. That's when fatigue and called-in sick days, they can spike and cause delays. And when those delays hit, we could get a meltdown that causes reputational harm to an airline. Now from runways to trailheads, and here we have the parks. They are mostly open right now, but services are thin. Visitor centers may have limited hours, but tours are paused and bathrooms, they might be closed or not serviced at all. If this lasts, expect more pack it in, pack it out, which means you'll be bringing in your own supplies and carrying out your trash. And we can see these stocks are another mixed bag, with Marriott, Expedia, and Hilton Grand Vacations in the green, while Booking and Airbnb are down. In general, check park status pages the morning of, not the night before. Next up, we are looking at pantries. And the good news is that October payments for SNAP, they should be on time. But WIC, which covers women, infants, and children, has a shorter runway and varies by state. The big retailers from Walmart to Costco will definitely be open. But if the shutdown drags on, infant formula will be the first pressure point. It's made by Abbott Labs, Nestle, and others. If benefit payments are missed, that could ding sales of big consumer staple companies like Coca-Cola, General Mills, Campbell. But the true cost will, of course, be shouldered by those left in need. And last up, let's talk now about investor portfolios. It's no secret that markets have been screaming higher with risk appetite pretty high, but behind the scenes at the SEC, deals are not getting reviewed. That means the IPO machinery is starting to slow, and just as IPOs have been picking up again this year. We've seen some big day one IPO pops from the likes of Klarna, Figure Tech, and Gemini Space, but investors might recall the late 28 shutdown, which delayed the Uber and Lyft IPOs by months. Those big bank tickers mostly in the red here, which is more likely to do with interest rates, but watch out for color commentary on the shutdown when JP Morgan, Goldman Sachs, and Citi report earnings on October 14th. Now, let's talk about what to watch next, and we've got a few items up here. A good rule for preparing for delays is to check websites frequently, as things can change quickly. For travel, look for TSA and airline updates. For parks, watch for status updates and closure notices, as well as travel booking notes. And for food assistance, watch for WIC updates and headlines on formula outages. If this drags into late October, that's when troubles heat up. And for your portfolio, don't read too much into the current price action, which is very risk-on. But do watch out for a slowdown in small caps relative to large caps, as well as for interest rate spikes and notices about IPO delays. The longer the shutdown drags on, the more kinks show up and get magnified. Tune into Stocks in Translation, the podcast. For more jargon-busting deep dives, new episodes can be found on Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcasts.
Well, you just heard there from Jared, and he spoke about airlines, and we hear from one of the airlines on Thursday, tomorrow morning. On this show, we'll be giving you Delta Airlines' latest earnings results tomorrow morning here on Morning Brief Market Sunrise. Okay, we're heading for a break, but coming up on Morning Brief Market Sunrise, a look at the future of the Fed's rate cut path. Stay tuned. Well, the Federal Reserve is in focus today. The minutes from the Fed's September meeting are due at 2 p.m. Eastern Time, so we'll get fresh insight into the decision to cut rates for the first time this year. Investors will also be hearing from a series of Fed officials throughout the day, and it follows a string of speeches on Tuesday. Well, Fed correspondent Jennifer Schoenberger has a closer look at what we heard.
Officials are still split about how much further to cut interest rates, with some more concerned about inflation and others more concerned about the job market, as the government shutdown deprives policymakers of key economic data they need to make monetary policy decisions. And earlier today, we heard from Fed Governor Stephen Myron, who reiterated he wants to get to neutral. That's a level on interest rates that neither spurs nor slows economic growth faster than his colleagues.
One thing I've said in the past is that I think that the neutral rate has recently come down relative to where it was a year ago. That makes monetary policy more restrictive than it was, say, a couple of quarters ago. And that additional restrictiveness of monetary policy poses some risks going forward, because if policy is tightened, then with some lags to policy, you would expect the economy to weaken. So in the near term, I'm not very pessimistic at all about the economy is, but I do see some risks lurking there if we don't adjust policy.
Myron has penciled in 5 more rate cuts this year. That compares with the median of just 2 more cuts from his colleagues. And Myron is looking to cut rates much faster because he's more optimistic inflation is going to fall, as he expects housing inflation to fall. He also believes that with lower immigration and what he expects will be a lower federal deficit thanks to tariffs, lower rates are in order. On the other hand, Kansas City Fed President Jeff Schmidt said last night he's more concerned about higher inflation and that the current level on interest rates is, quote, the right place to be. In reference to cutting rates further in a speech last night in Kansas City, Schmidt said, quote, the current environment is one where aggressively boosting demand could raise the risk of an outsized increase in prices as firms gain pricing power and increase the pass-through of tariffs to consumers. Now, Schmidt noted the fact that prices of durable goods, so things like washing machines, refrigerators, televisions, the fact that they're all increasing is notable given that durable goods prices have actually fallen steadily over the past 30 years. At the same time, he also pointed to increases in prices for services, so things like haircuts or getting our lawns cut, and those have been increasing around 3.5% over the past couple months, well above the Fed's 2% target. And of course, Fed officials flying blind right now during this government shutdown without official federal government data. And Stephen Myron had said earlier today that private sector data are not a substitute for official government data, and that, quote, the Fed officials are deprived of the data they need most to make monetary policy decisions.
It's time now for today's trending tickers. Topping the list this morning, Tesla, the electric vehicle maker unveiling cheaper versions of its Model Y and Model 3 cars. The new Model Y will cost just under $40,000, which is just $5,000 less than the previous model, and doesn't have leather seats or a panoramic glass roof. And the Model 3 coming under $37,000. Both models will be stripped down versions and have lower mileage than regular versions. But it was a sell the news event on Wall Street. The stock sliding more than 4% on the day. Ahead of the open, Tesla's set to open modestly higher though. Okay, Intel is reportedly gearing up to unveil details on its newest PC chip on Thursday. According to Reuters, the chip known as Panther Lake is the first product to be made entirely using its next generation manufacturing process called 18A. The chip is a high-end processor that's usually included in more expensive laptops. Reuters says Panther Lake chips will be available early next year. Plus, shares of Confluent are soaring on a report that the company is exploring a sale. Reuters said the software provider is now considering a sale after receiving takeover interest. Despite the surge in AI stocks this year, Confluent is down more than 25% over the summer. The company said it lost business from a large customer. The process is still in early stages, according to the report, and may not result in a deal. Okay, now for something a bit different compared to usual. Now, we can all argue about who the best footballer of all time is. The correct answer is, of course, Diego Maradona. I'm afraid I'm old school. But one thing that can't be disputed right now is who is the richest. And though he's got less Ballon d'Ors than Lionel Messi, Cristiano Ronaldo's bank balance certainly exceeds that of his Argentinian rival. The Portuguese forward has officially become a billionaire. That's according to the Bloomberg Billionaire Index, which valued his wealth at $1.4 billion. It's the first time Ronaldo's name has appeared in this index. Now, during his more than 20-year career playing for some of Europe's biggest clubs, Real Madrid, Juventus, Manchester United, he's cashed in on his stardom and signed lucrative side gigs with the likes of Nike and Armani. But perhaps all those salaries and sponsorship deals pale in comparison to his current salary. Many questioned his move to play for Al Nassr in Saudi Arabia, but his fresh contract extension that he signed just in June is reportedly worth, get this, $400 million. Not bad for a player who is in the twilight of his career, now aged 40 years old. But don't feel too sorry for Lionel Messi. He's earned roughly $600 million in salaries before tax. He's obviously now playing for Inter Miami on a guaranteed $20 million salary a year. Now, one of the key things that sets Ronaldo apart could be how he has monopolised on his CR7 brand and developed his presence on social media. Get this, he has over 660 million followers in Instagram, and that makes him the most followed person on that social media site. So it's one to watch for sure, footballers and their money. Okay, before we go, let's have a check-in on the markets. We start with Bitcoin and gold. Let's have a check-in. Gold obviously climbed over $4,000 an ounce, but Bitcoin there falling off its high. Remember, on Tuesday, it actually went over $126,000. Gold still well above the $4,000 mark there, as you can see. Okay, let's move on to the Asian boards now. And Asian stocks, well, they ended mostly lower today after Wall Street's main indices pulled back from record highs overnight on the back of mixed messages from those Federal Reserve officials on the pace on interest rate cuts and concerns about a bubble forming around artificial intelligence. Interestingly, though, today the World Bank actually raised the region's growth forecast. Now, mainland China and South Korean markets, well, they were still closed for holidays. So the focus really in Japan, in Hong Kong, and obviously in India there. All down though. Okay, let's turn to Europe now. And European stocks, well, they moved higher in early trade as investors reacted to proposed tariffs on steel imported into the European Union. Now, yesterday, the EU announced it will reduce tariff-free quotas on imported steel and hike tariffs from 25% to 50% on any excess imports. Now, finally, let's see how Wall Street could open. And US stock futures, well, they're inching higher this morning after declining yesterday. Investors will be keen to get a look at the release of those minutes from the Federal Reserve's September policy meeting. But there's also plenty to keep them interested. Also, we've talked a lot about AI today, and we'll have to see how Tesla is going to perform today after falling quite steeply yesterday as well. Okay, that is all we have time for today on Market Sunrise for this morning. But please stay tuned to Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Julie Hyman ahead of the market open on Morning Brief. She'll have more on those Fed minutes for sure. I'm Ramzan Karmali. Go own the morning.